Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Monday edition. Yes, I see some chat going here. Shorter week. We will not be doing a show Thursday or Friday. I will be on my way to the great state of Dallas, Texas. Great state of Texas, the city of Dallas, and the home of the mediocre Dallas Cowboys. Sorry for all you Dallas Cowboys fans out there, but it's actually kind of comical how bad they have become. I don't know who to cheer on tonight. You got the Raiders and I got the Cowboys. It's like the battle of the worst kids at school, man. Anyway, hope you had a good weekend. I didn't even check out how disheveled my hair was this morning, but they're looking pretty messy. We had a couple great questions come in. What happened today? The trend is your friend till the bend of the end, Oliver. You know, we've kind of been feeling like there's a pullback coming, and I just think that today was a continuation. Judging by the price charts on Friday, the candles were setting up for some positive market action, right? But you're hearing more and more about recessionary data coming out, more and more about how these markets are starting to look worse and worse, and people are fearful of just more of an economic collapse. And as that fear precipitates and as the media runs with those stories, whether it's true or not, it will cause these markets to sell off. So yeah, I'm with Steve. I do think markets are going down. Oliver, we talked about Bitcoin going down on November 3rd. I said we got troubles ahead for crypto. That is not done. I have a standing bet with Ed up in San Jose that it will hit 76,000 before it hits all-time highs. Of course, being optimistic, I believe that we'll hit all-time highs before we get to 76, but very real possibility that we get down to 76,000 on Bitcoin, which is not music to anybody here's ears, but just go watch that November 3rd show. I mean, I outline, at least from my perspective, all of the different pieces that could cause this market to go lower. Now, that said, I actually opened up a new position today, which I did not update my table. I'll do it as we get there. I also kept that CoreWeave, which is kind of wild. I wasn't planning on it, but the way we started to shape up today, I felt a little bit more confident on it. I'll tell you what I did with CoreWeave today, which is a big loser right now for me, but we'll see how that one all pans out. All right, let's jump right into the questions at hand. I got two great questions, one from Jeff and one from Les. I'm going to try to cover both those and get us all our markets on today's show. So let me start off with the visual here, which is what is the best exit strategy? As you all know, this is an impossible question to answer. I don't believe that there is a best strategy for exiting a trade. Whether it's, we'll focus on losing trades, right? Winning, fine, that's it. We're just going to pretty much go to the losing side of things. So if you're in a bad losing trade, what should you do? And this was brought up from Jeff, who's probably here today. Let's see. Yeah, Naum says, sell. That is the best one, and you're totally right, Naum, but the question is, when, right? If I've conveyed I've conveyed many messages to you about longevity and what it takes to kind of survive as a trader, but it's about having rules. And you can't say sell and then sell at different times on different strategies at different levels, right? You need to have rules in place as to what those circuit breakers might be for you, right? What level is it where you say, okay, fine, I'm done, I'm out? It should all be planned out. TD says, best strategy, get out before the bend. That'd certainly be the best time, but if you're getting out before the bend, that means you're selling into something that is still theoretically moving up. The point of getting out at the bend at the end is you've now let price prove to you that it's no longer trending up with the same intensity that it was before. That battle between your buyers and sellers has fundamentally shifted, and now you're looking at more weakness coming into the equation. So I'm with Steven. I think that I always call you Steven. I read this S-T-E-V-E, but it's Steve. Consistency is best. So here's the question that came in from Jeff. And it says, if I want to close a position once the trend is no longer up, what are some effective exit strategies? Here are a few I'm considering, but I'm sure there are more. And there's countless different ones. And I'll give you my 2 cents on a bunch of different ones. Number one, for our podcasters out there, thank you for listening. You should watch the YouTube channel because you get more visuals, which is a little bit better. He says, number one, a daily candle closing below the controlling swing low. Number two, a weekly candle closing below the controlling swing low. And number three, a daily candle closing below the controlling swing low plus 2 consecutive red days. I'll be honest with this, Jeff, and for everybody else, all 3 of those are very viable, right? I think what it boils down to is using one of them and seeing what your results are. Bottom line, right? What works best for you? So if we look at, let's go back, that we're on CoreWeave right now, but what if we had a good situation? Well, I mean, this is actually a good example. So here you have CoreWeave, which just broke below its controlling swing low. And I actually think that this is this is way after the fact because it broke its controlling swing low much earlier on. Let's go back to Bitcoin. We were talking about Bitcoin so much recently. So on this chart here of Bitcoin, the question is, where was that controlling swing low? And I took all my numbers off my screen because I was teaching a class and wanted kind of a clean chart. But the number that I had mapped out was this number here. And that was 107. You guys remember, for me, that 107 mark, not that it was the controlling swing low, but it as we were trending up here from these April lows, it was making higher highs, higher lows, except for this little blip right here in July or June. But it kept on making higher lows. Now, you could make the argument that this low right here on August 3rd, you could argue that that was the controlling swing low. Because if I look at the chart from this perspective, you guys, where I'm at right now, nobody here can refute that that is still in an uptrend. It is still making higher highs, higher lows. But once it did that, once it bounced off those August lows here, great, it broke it. Technically, your first out should have been on August 25th, right? That was the first trigger that we have broken a controlling swing low. But if you're a little bit more like, well, let me let it prove, well, now we've established this new low, which is from August 29th and 30th, which is also going back and retesting the origin of the move that happened on July 8th of this year. So you had the big impulse move on July 8th. We broke a controlling swing low, came back and tested this one. That's where I put my line, right? My line was if we break 107, that's when Bitcoin is in trouble. And notice that we broke that one, and since then, it has just been a series of lower highs and lower lows, and I don't see this changing, right? The trend is clearly done for Bitcoin. How long is it done? I don't know. I actually anticipated it stalling somewhere around 93, 92, but not there. It's right now, it's a sinking ship. Now, hopefully this will stabilize. You can see I've got levels drawn down there right around 84,000, 85,000, somewhere in that ballpark. That, to me, will be the most logical next target for Bitcoin to get to. But in just curiosity and question here, it's like, well, what do I use here? So for me, it was a daily. You got to use the daily. Now, of course, I'm still holding my Bitcoin because this is not something that's easily liquidated like a normal stock. But if I go to the charts here, it will be a close below that 107. So for all intents and purposes, October 17th should have been that point where you got out. Now, if you did his first choice, which was a daily closing candle below this controlling swing low, that would have been your exit point, Friday the 17th. So I'm going to put a vertical line there just so we can see the three different numbers. You're going to have three completely different numbers here on Bitcoin. And if you want a different chart, we can use a different chart. Just let me know. So that was where choice A would have taken you out. Choice B was a weekly candle closing below the controlling swing low. Okay, let's go show you a weekly. Well, that would have been weeks later, about a month later, that would have gotten you out the week of November 3rd, which conveniently was the show that we had done. And I think that might be why I did the show that day. It just felt like we were kind of breaking below some levels. So the second blue line, which I will now make a different color for the sake of our audience here, we'll make that one, I don't know, I think that's red. Okay. The red vertical line is where you would have gotten out if you're on a weekly close below the controlling swing low. And then the third choice that he had there was a daily, a close below the controlling swing low, but 2 consecutive red days. So, this is a very difficult one because look at this chart. The first time in the blue one, we didn't have 2 consecutive red days. As you broke down below it and had a close on November 3rd, which is when we did that show, we had 1 red day followed by a green day. So your 2 consecutive red days, if you were waiting for 2 consecutive red days, that would have been here on November 12th, would have gotten you out. Now, what would those prices have been? If you exited on the daily candle, you would have been out of all of this, and honestly, a lot of stomach-turning moves, on October 17th, and you would have been out at 106,522. I'm writing all this down so I can see which one, in hindsight, of course, is the best answer. Now, if you use the red vertical line here, which is the weekly close, then your exit price would have been 106,601. So slightly better. And if you waited to the final double negative candle after the daily close below, you are looking at a price of 100,000. So you would have lost an extra 6K if you use the third strategy. Personally, I'm not a fan of the third choice that you put there, Jeff. And the reason for that is I got to do a lot more work, right? I have to wait for the close, let that alert me or trigger me, and then I got to go back and check and make sure 2 consecutive red days. I personally think, for me, it's a daily candle. I use the daily candle. I just think that that's an easier way to go. Once I have my numbers set and I know my demand zone, again, this goes for demand zones as well. If I've established a demand zone or a controlling swing low, the daily close below that, I'm out. Now, the truth is, when you get those daily closes below, quite often it'll rip right back up. If I feel like things are looking negative, obviously with Bitcoin right now, it looks very negative. But let's say, for example, you guys can all see my screen here. Let's say where that cross is, that was what took us out. This red candle right here took us out. If I'm feeling that now sentiment has changed, and this is that point where, it's now down below my pivot, therefore I think the uptrend is broken, I'm actually looking for a different type of trade. I'm actually going to go back in here, and I'm going to be looking for a bounce back up in a supply and looking for that as a shorting opportunity. Now, we actually got one here, as you'll notice on this chart for Bitcoin. It came rallied back up, and there's a short opportunity. So not only does the close below on a daily illustrate to me that there's weakness because it's finally gone below a key critical level where everyone's been buying at, but once it does that, I feel like sentiment has changed, and now I'm looking for shorting opportunities. There were several great shorting opportunities on Bitcoin here, and I guess that's the way I would go about it. Now, we could do a wide variety of other things, right? Let's add on, we saw the moving averages. So someone mentioned about the death cross, which we officially got today, right? Actually, yesterday, on Sunday night session for Bitcoin, this is the spot price. So on Sunday night, we officially crossed over into a death cross. This is also a piece where people will say, I'm out. This is the final throw-in of the towel. Now, of course, in my opinion, this is far too late. If you're trading death crosses, which is a cross between a 50 and a 200 period moving average, you're late, man. This is way, 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 way outside of, being early and anticipating price moves. What it does signal, though, is anybody who's using this type of indicator is now bearish. So the bearish sentiment for Bitcoin right now is off the charts. And everyone's really bearish, and looks like we're going to be going much slower because that death cross is going to precipitate itself into all the headlines for most of the major media platforms that cover crypto. Ooh, yeah, exactly. Steven says that death cross is 30,000 too late. Yeah, so if you're playing this and on Friday's or Sunday night session, that's when it officially crossed, you would have exited your position at 94,000. That's an extra $12,000 loss that you would have incurred. So while people do use this, I would say no way. Great question, Mickey. What happened last time Bitcoin had a death cross? Easy to find out. Right here. Now, this is another, I got to go on camera for this so you can see my rant. I hate the death cross. I think that people who are using it as a trading indicator, you're off your rocker. Forget it. This is just a big, 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 big psychological thing, right? If you are trading the death cross, you are so late to the party. Like, look how much Bitcoin sold off here from its, at that point, all-time high. So it was back, to answer the question, last time we had a death cross was in 2025, and that death cross happened right here on, sorry, I'm trying to get the exact date, April 6th of this year. Bitcoin fell 28% off of its all-time high. The death cross happened. 2 days later, we were already back up and moving to the upside. So this is such a late indicator. It's ridiculous, right? I think it's stupid. Liz says, I recently saw Ben Cow on YouTube that whenever Bitcoin has a death cross, it leads to a rally. I'm not going to say that it happens immediately, right? It's not going to happen immediately, or most likely it's not going to happen immediately, but it's going to happen. I mean, when you have a death cross, that means that the 50-period moving average, which is, in this case, we're looking at the daily time frame, that 50-period moving average in blue is now below the 200. Yeah, It's extremely low. Like, yeah, and I agree with you. I think he's probably right. I mean, here's another one, and this is during a period of time where the market was just sideways, but we had a death cross on August 9th of 2024. Well, it didn't do anything for 3 months. What's another big one? Here's another death cross that happened in September of 2023. And it did nothing for about a month and a half, and then just went crazy wild, bullish move. I'm going way back now. Here's the last significant one, right? This one was a monstrous decline. And that was the death cross happened on January 14th of 2022. Now, that one is one of the rare ones where it did not come back. It continued to sell off more and more and more. So what I do is I go from where the death cross turns into a golden cross, right? If you're looking at that. So the death cross happened in January 2022. The golden cross, where the 50 crosses back above the 200, that happened in February of 2023. So you've got 13 months of down and sideways. It actually dropped 46% between those two crossings, between the death cross and the golden cross. So not a fan of this. I do think that they can lead to overbought or oversold situations. So, I'm not a fan of this. And going back to what spurred this was, what type of triggers can we use to figure out when to exit a trade? And that was from Jeff. So far, in my opinion, just for my style, I like the daily candle closing below the controlling swing low. It just makes it easier and simple. And the truth is, Jeff, I'm going to get taken out a lot where moves will take me out on that daily and then come right back up. I'm okay with that, right? I'd much rather, having done this so long, I can tell you I'd much rather get out, even though it rallied up in my favor after the fact, than hold it and waiting for another couple candles to close and losing another 5, 10, 15%, depending how fast it moves. So entry signal to entry signal. No, this is entry to exit, depending if you're using the golden cross. So let's go back to current market situation, and I'll show you. Let's get one of these moving averages turned off. That's probably going to be the 200. What a lot of traders will do is use something like a shorter term crossover. So there are people out there, very short term, I would say, use something like an 8 and a 13 period exponential. I have simple on the screen here, so I apologize, but I'm not going to modify these. I'm going to use just the simples. It shouldn't be that different. So if you do like an 8 and a 13 period moving average crossovers, this is a strategy that a lot of people use. I think it creates way too many signals personally, but this also is a way to time your trades. In this case, the last time it would have told you to sell would have been on November 2nd, actually middle of the day on November 3rd. And it's still saying stay short because the shorter term moving average is below the longer term. And that's the way it should say. No, it should stay. It depends on your tenure. Exactly, Andres. It really depends on what your trading style is. Like, I don't use an 8 and a 13. I just not for me. I actually don't like moving averages. I like price levels themselves. I know traders who will just sit there and use something like a 20 period moving average. And they'll keep their eye on that. And if it gets below it, here's your 20. Now, again, remember, moving averages, all of them are lagging. Right? They're all lagging. So I'm not a big believer in moving averages either. I've looked at all the different indicators, like ADX. Can Bitcoin do a double top? Well, of course it can. It's probably not going to. I mean, we're not looking at tops right now. You're really more happy, Rocio, for a double bottom. I mean, right now, as John O'Donnell would say, and John O'Donnell loves this one, he would say, Bitcoin is a bug in search of a windshield, right? Yeah, Lisa, and this is an exception. It says, but you are holding Bitcoin regardless of what it does right now, correct? I am, correct. So because this is spot Bitcoin, right? I've had other Bitcoin positions through ETFs like IBIT. I've liquidated those, right? That's a no-brainer for me. Liquidate those, that's fine. But if I'm looking at the spot market, it's far too costly and difficult for me to move things from cold storage back to exchanges with all the transaction costs and then sell it and pay those transaction costs. Those accounts for the stuff that's on my ledgers like this, I mean, it's frustrating. I've certainly lost a lot of value there, but I'm not worried. Like several others here, I'm looking at probably 2030, maybe 2031, maybe even longer than that before I even get serious about selling that Bitcoin. I think, and Ethereum and Cardano and all that stuff. I think that it's a longer term play. On the shorter term side, I'm definitely looking at going short Bitcoin. And you can either do that through the futures markets, you could short IBIT, you could buy puts directionally on IBIT or other ETFs out there that represent the spot market. That's a much better way to go than trading the spot market of crypto. Absolutely. Yeah, either way, it's like I say, it's irrefutable right now what is going on with Bitcoin. It looks really bad, and it's all crypto. Owen says, I just keep buying. Well, you got to be careful, As I did a show a couple days ago or last week, says the market can remain irrational longer than you can remain solvent, and that's very true. You just got to be careful. Make sure you don't put all your money into Bitcoin. You just never know exactly what's going to happen. Obviously, I have my hypothesis, my thesis on what I think Bitcoin might do over the next few years, but I may be completely wrong. The more I dig into digital assets, the more I dig into the politics of it, and I think it's here to stay, and I think that ecosystem will grow tremendously, but I could be wrong. Can we short Bitcoin from above? Sure. You can short Bitcoin anytime you want. Just go out here to IBIT. Short IBIT. Right? IBIT's looking absolutely atrocious right now. And you look at IBIT, you got a lot of unfilled gaps here. It could easily see IBIT fall all the way down to 44. And that would be pretty bad for anybody who's long on the crypto space. And what you're going to see, this is going to be a lot of liquidations. So there'll be a lot of people who are going to start selling their Bitcoin and IBIT and all these different ETFs just because they don't want to be losing. And right now, the talk track, the industry wave of content is all negative, bearish on crypto, which we've been saying for a while now. I've been very bullish, but once we broke this back here in October, that made me feel real nervous. And I've been saying, look, it just doesn't look good. It's just not gaining any strength. Really, the big warning sign is when we started to rally here in October. We tried to rally back up to the 115,000 mark. We stayed there for 3 days with long topping tails, and then it came right back down. That, to me, was the most significant part. Because if it really was showing some strength, I had a broadening formation here. You guys might remember the pattern looked like this. It's called a broadening formation, and that is where you have, let me turn this snap off. That's where you have price in somewhat of a channel. Actually, I think it was actually more here. And it just looked like a broadening formation. And typically, it'll kind of continue to show that form until it doesn't. Well, now all of a sudden, we've broken down below it and, look out below. I hate it, but that's the truth of the matter is we're in a bad spot. And this is, again, goes back to Jeff's question about what's the best way. Again, for me, it's a daily candle close. And we'll only know after the fact, down the road, how it ultimately turns out. But for Jeff and anybody out there that's trying to figure out what exactly that strategy is, it's about practice. It's about practice, and it's about also having that strategy and trying it out for a while. How do we hedge our Bitcoin? Buy puts below. You can buy at the money if you want to protect it. I mean, that's a broader discussion of, what strike do you buy it at? What delta are you looking for on those options? How many options contracts you need to hedge your position fully? But yes, buying puts would probably be a good one. Or you could just take the same value that you're long in Bitcoin and short that same value in IBIT, and that'd be a zero. You're just basically hedge your position that way. And that way, no matter what Bitcoin does, you're not going to win, you're not going to lose, right? The spot Bitcoin would go down in value, but your puts on IBIT would go, or your short position on IBIT would go up in value. So you would balance out exactly if you did dollar for dollar that way, but options are a more leveraged way to go. It seems that Bitcoin never recovered from the day the S&P was down 150 in early October, down ever since. Yeah, it's not looking good. Are assets feeling contagion effect? Let me go to the second question here before I get to that one, Anders. That's a great question. And Les, I didn't see you in here, Les, today. Are you here? I'm pretty sure Les is here. He's here every day. By the way, I think you guys had a really cool double launch the other day. You had like two streaks from Cape Canaveral, had a double launch from SpaceX. That sounds pretty cool. There he is. So I think I got Jeff's. Darn, I'd be buying a lot of Bitcoin puts. Yeah, well, I would too. I got quite a bit there. That's why you could, if you're using the option side of things, big, well, you got leverage on your side. Unfortunately, you have time is not your big ally. All right, so this is the second question. Came in from Les. I like this one a lot. He says, it seems that XLF has not been performing well for several weeks, if not more. What might be some reasons for it? Well, this goes down a rabbit hole of a lot of different reasons, right? And there's we can all point at something and say, well, this is probably the cause, or that's probably the cause, or maybe this is the probably, right? It's a lot of different finger pointing going on as to what is causing not just XLF, but markets in general. So let me go back and show you something here. I think I've shown this to you guys before. I think I can actually copy this over to chat. Maybe you want to bookmark this one. Here it is. Let's hope that that conveys to you guys. I love these perf charts. So this is stockcharts.com. At the very beginning, you can select interactive perf chart, and it allows you to overlap a lot of different things. So what I have here is 2025. This is the whole year so far, performance, and I have a lot of different ETFs on the screen, right? You have the S&P 500, which I use as my benchmark, right? That's the zero line, if you will. You've got financials, energy, utilities, industrials, technology, consumer staples, healthcare, real estate, materials. I don't have consumer discretionary on here. We could add it if you like. But the reason for doing this was to verify and validate what Les is saying. He says it seems that XLF has not been performing well for several weeks, if not more. What might be some reasons for it? So the first thing I want to know is, and let's call myself an analyst right now. As an analyst, I'm going to immediately go, okay, if the belief is that XLF isn't performing, I need to verify that. Because what if everything looks exactly the same, then XLF isn't anything special. It's not an outlier. So, what did he say? If you look here, the red line, and again, I'm colorblind, so I'm sorry, but the red line shows the S&P for the year up 14.94%, at least right now. So everything above that is dragging the S&P higher, and everything below that is dragging the S&P lower. Now, what is underperforming? Well, the worst performing segment is still positive. That's consumer staples, right? Not set to histogram mode. It's just basically a line comparison looking for percentage performance from January 1st, okay? Lower left middle box. What are you asking? Lower left. That'll give you the. Yeah, I can do that. Hold on. Let me do it. I like this way better, but we'll do it that way as well. Hold on just a sec. So worst performer, staples 1.29. Just above that, you have materials at 3.59. So those are all dragging these markets down. Energy 5.26%, and here's your financials 7.56. So realistically, financials are about 50% of the rate of return of the S&P. Now, why might that be? So this does justify Les's comment that it's underperforming. Just for curiosity, I think we all know what this top one is. I mean, we don't even need to put a cursor on it. Everyone knows what's leading this market higher, and that is XLK technology, right? It's AI, it's semiconductors. They're the ones that's rocking. Right now, it's up 21.8%. But notice what's happened since, let's go back here, October 29th. Technology has been taking a big hit. On October 29th, technology was up 30.6% for the year, and now we're only up 21. It's dropped like 8% since the end of October. That's a pretty significant decline, and of course, if that's the piece that's caused this S&P to rally so much, it's going to be the piece that brings this one down. And of course, there's a lot of different reasons. Your second best performer is utilities, which usually perform well in a recessionary environment. That's up 20.26, and just slightly better than the S&P is industrials. That's a surprise, up 16.08%. Okay, I know I spent way too much time reading those numbers off, but I want to bore you to death. So, to get to Les's question, what are causing potentially financial woes? I'm curious, you guys type in the chat what you think, because there are a lot of factors driving this. And I'll run through the four that I think are kind of the major pieces here, at least stepping back and looking at big picture economy, but feel free to put them in there. And before I go into mine and read all yours, I'll go put the histogram piece that Les is talking about. So there's your histogram, which makes it much easier to see. You're right. And that's since the beginning of the year, good representation. You only have 3 market segments that are better than the S&P. Everything else is much lower than that. And to be honest, financials aren't that bad. I mean, still 7%. Dakota says, what's your favorite utilities and industrial stock? I don't have one. Sorry, Dakota. I'm too lazy to pick individual stocks nowadays. So I don't really care. I'm going to buy XLU or XLI. That'll be where I go. I want something diversified. And I'm not trying to dodge your question, Dakota. It speaks volumes to what my perspective is on analysis. I don't want to sit there and dive into all of the different utility companies and understand their business models and how they're making money. Too much. Bores me. So I think that going with the ETF is just a much easier way to go. You said last year that you would liquidate your crypto in early October, November with 4-year cycle. What changed your mind? Cost, Dr. Juan. Cost. I mentioned this before. The cost for me to move all my crypto from cold storage onto an exchange and then sell that would probably cost me, depending on which exchange I sold it on, the cheapest I could probably get for my entire portfolio would be at the very lowest I could possibly pay. We're talking close to $50,000, $60,000 just in transaction costs, just to sell it. That doesn't include the movement over to those exchanges. I'm not about to spend $50,000 in the transaction cost to liquidate my position. Now, in hindsight, I probably would have been okay to do that. The second piece there, Dr. Juan, was capital gains. I'll be spending a ton of money on capital gains. My time horizon for cryptocurrency has always been decade long, not 1, 2, 3 years. So it was a tough decision, but I decided to not move it. I decided to keep it in my cold storage, and I'll ride out this storm like I did the last one. Okay, so what do we got here? So for some of your factors as to why the financial woes are still there, so liquidity issues in the repo market. There are some liquidity issues, but they're still making 4%. It's just there's not as much money put in there because the financial firms don't have that much. There's less cash for them to put in those markets, but the repo market is still active and they're still getting a 4% yield. Credit defaults. So we are hearing a lot more about defaults on loans from retail, and that could be car loan, could be home loans. And what banks are doing now is they're increasing on their balance sheet the allotment for defaults. So profits are now declining because they're moving money over to protect themselves from these, what they perceive as an upcoming, not an epidemic might be the wrong term, but an increase in defaults from the loans that they've issued. There's two things that come from that. Number one, if they're allocating money to prepare for loan defaults, obviously that's less profit for the bank. But number two, and I think this is a much more important piece, it's signaling that the banks are well aware that customers are no longer being able to pay down their debt without defaulting. That's a sign of economic weakness. And number two, it's going to cause those banks to lend out less or raise the rates at which they charge. Both of those are bad. We want banks to lend out money to get the economy to grow. But if banks are concerned that people are defaulting, they're going to start to issue fewer loans because people won't qualify for the higher standards. Yeah, it seems to me like this could be pretty problematic for the markets going forward. So that's a great one there, Les, is credit defaults. Steve says, jobs, inflation, stagflation. So the inflation part, I agree with you. When you have persistent inflation, which the Fed has not gotten under control. Yes, we're at 2.9%, but what has Jerome Powell said over and over and over again for 3 straight years? We're going to remain data dependent, and it seems prudent that a 2% target for inflation. That's what my board members and I have targeted, and we're going to stick to that and do everything necessary to get to 2%. Then why the hell are you cutting rates? Why are you cutting rates twice already this year, and you can do it again in December? You're forcing inflation higher, and when inflation goes higher, that creates economic uncertainty. That's going to be bad for the banks as well. So absolutely, Stephen, the inflation side of things is bad. Now, jobs. How does that hurt the financials? With higher unemployment, we have fewer people qualifying for loans because, hey, can you show me your W-2s? I don't have a job. I'm at the EDD right now getting a loan or getting my check. You have fewer people. And again, this isn't like a catastrophic amount of unemployment, let's be clear, but it's a slow trajectory up. And every 0.1% it creeps up. That's a lot more people out of work. It's a lot more people that cannot qualify for loans that they may need, whether that's for a home or just personal money to survive, a HELOC or something like that. That's not good. So jobs market, I think, is definitely a piece of this. We're not sure yet whether we're going to have massive unemployment in the next year or two, right? But it feels like the markets are preparing for that inevitability. You guys got some really good ones in here. That was a good one. I'll get to it in just a second. Let's see. TD says the Genius Act being passed goes against CFI. That's an interesting one. I don't have that on my list as being like a major catalyst for financial slide, but it could be, right? Ultimately, what I think it means is, I think when we look at the Genius Act, of course, for those who don't know, Genius Act is the regulation of stablecoins in the United States, which allows anyone to issue a stablecoin and that could put pressure on banks. What I think you'll end up having there is somebody like a JP Morgan Chase who pays 0.01% interest is going to have to start paying more money, or people like you and me will go, why should I keep my money at Chase making 0.01 when I can go somewhere else and make 3% for holding the same basic asset? And that could cut into banks' profit margins. I don't think we'll see the full impact of that till next year when it gets implemented, but I think you're spot on, but not today. I think that might be something in a year and a half where it's like, oh, okay, big time. I think it's profit taking amidst the bubble hysteria. I'm with you there. I think that the entire market's realizing that we are way overdone. I mean, every time I show this chart, and I know I've shown it to you way too many times, I know you're probably sick of seeing it, but when I go back and look at a monthly time frame, and you look back at these blips on your screen that look like nothing right now, these were two of the most significant financial crises in history, and they look irrelevant right now. They look like nothing. This market has done the impossible, and at some point, profit taking is going to come in, and I think that this is a part of that. I think we're starting to see the beginnings of more profit taking. And again, I'm not forecasting a 60% drop in the equity markets by no means. I'm just saying that this rally may have paused, and we'll get some pullback here, which could give you some buying opportunities at lower prices. Absolutely. Let's see what I got here. Went from near certainty the Fed would lower rates in December to about 50-50. Yeah, that's definitely one, and I think that's actually a good thing, right? I don't think the Fed needs to lower rates. I kind of hope they don't. And Liz, that's a great one. I love your comment. Concerned about the Epstein files. This cracks me up. It really does, the Epstein files. It's like this running joke. I don't know how you guys feel about it. And again, I don't have a dog in the fight either way. But you looked historically at some of the photos and things. Pretty sure Trump was a big part of Epstein's circle. And the comments he's made on camera many times about, his locker room talk that men do, I don't know. It could be pretty damaging to Trump's career if it actually did get out and the Epstein files were officially released, but who knows? We'll probably never see those things. It's probably right next to where Jimmy Hoffa's grave is, right? We'll never know. But that is comical. It doesn't depend on time of day to sell, plus switch to lightning. Not really. So, hold on. I'm scrolling through here. Man, I missed that one. What did it say? That was from Jason. So it doesn't depend on time of day to sell, plus switch it to Lightning Network on Bitcoin. You could switch to Lightning Network on Bitcoin, but that's just to move it. If I want to move it from cold storage to Coinbase, right? I'm not going to sell my Bitcoin on the Lightning Network and get cash. I can't get USD. So what I need to do is I need to put it on a Coinbase, a Kraken, a Gemini, a Binance, a Huobi, a KuCoin, whatever exchange you use, and say, okay, I've now sent my Bitcoin there. That's one transaction cost. That one I'm not worried about. It's a few dollars. I don't care about that one. Once you get to Coinbase or Kraken, now you're spending 1.4%, 3%, 4%, depending on how you execute it. Now all of a sudden, you're talking a lot of money. Time of day doesn't really depend so much with Bitcoin because the volume isn't there. Ethereum used to really matter what time of day, but that's not that important anymore because of all the layer 2. So no, time of day is not that important anymore like it used to be a couple years back. XLove is down. Bank stocks are bearish. That's definitely one. No problem, Liz. Have a great day. Rob says not cutting rates. Did he reduce some more? So with rates, the more that we cut is actually better for the banks, right? The more that the rates get cut, the better for the banks because now they have more wiggle room with what they can do with their interest rates. They can play around a little bit more. The higher they go, the more difficult it is for them to squeeze profit out of higher rate environments. So the lower it goes, actually more profits for those banks. That's great. Let's see. You should be impersonating a psychic. No, not for me. Interesting, Mickey. I don't know if that stat is true or not, but that would seem about right. 75% of the workforce are between 0 and 49 years of age. I don't know about 0. Any kids working out there? Speaking of banks, Wells Fargo sold my mortgage today to Rocket Lab. Yeah, they do it all the time. My mortgages transfer all the time now, and it's so funny. So funny. I was making it laughing, Rob, because of the Epstein files comment from Liz. Sorry, I want to make sure I don't miss comments, so I'm scrolling up here. You guys, I'm way back. My bad. Why is the market dropping some more? Rob, to me, financial markets are like an avalanche. When they start to roll and fear sets in, that fear will precipitate. And we look at the S&P 500 here, go back to a daily time frame. I wouldn't say that this is a horrific outcome today, right? We had that nice rally up on Friday. It looked good. This isn't really that bad. Where I think, pardon my French, everybody. Pardon my French. I apologize ahead of time. If you don't want to hear it, close your ears. But if we get below 65.53 on the S&P, that is the proverbial the shit hit the fan moment, right? And it's one of those ones where if it happens, everyone's going to talk about it. We're now officially below that level, and then we start going. The second point is 20% off the all-time high. So here's your S&P. Let me go to snap mode so we get this exactly to the T where that number is. 20%, we still have a long way to go, guys. I feel like people are getting a little bit worked up on this market decline, and we haven't really done much yet. I'll be honest. We haven't really moved much at all. 20% off of this all-time high for the S&P 500 puts us at roughly, I'm going to say, let's see, that's 20 and a half. So I'll do 55.30. And I'll put that on the blue line here. And I'm going to just type in coordinates. We'll do 55. We are a long way off from this. But in 2007, when I was first on CNBC, I came back on CNBC in 2008, and I said, if we get past 1256 on the S&P 500, break out the bulldozers, we're going down in a big way. And the reason for that was once you get to the 20% mark, everybody now says, bear market, recession. This is it. I'm going to just type it on the screen here, decline, and I'll put that right here. We'll just let that sit and ruminate. Because if we get to this blue line, where I have on the SPX, where it says 20% decline, I expect it to bounce aggressively. I expect the central bank and the Federal Reserve to come in and bail it out and pop this market up through rate cuts. But in 2008, they couldn't stop it. There was just too much damage and overinflated leverage in the system, which may be the case today with overpromised things from AI, overpromised things from OpenAI, and all the technology that's being pumped up. That could start to liquidate. And if you think about it, everyone right now is starting to get really fearful. Like, oh no, this is a market correction. This is nothing, guys. We're still in an uptrend. Let's not panic here. We are still in an uptrend, and a strong uptrend at that. I think things look actually pretty darn good still. Now, if you look at the NASDAQ, still an uptrend, looking good. Let's go look at the Russell. Canary in the coal mine. Uh-oh. This is not good. Okay, the canary in the coal mine has officially, as of today, closed down below that 2381 mark, which is a controlling swing low. Russell has signaled the trend is over. Now, it's my belief, and this is just me. You guys don't have to listen to what I say, don't have to believe it or not, but the way I'm looking at it is, right now I'm looking at that Russell 2000 as the proverbial canary in the coal mine. It's signaling that small cap expectations going forward are underperforming, that they've been overvalued. As I mentioned, historically, small caps have this beautiful rally up as people are expecting prices, the mega caps to buy them. Well, now all of a sudden, I think that the expectation is the spending is stopped. So small cap prices are going to fall. Money will typically flow from those small caps into the large cap, but ultimately it's a sign of weakness in the economy. And if that does happen, this will roll over. Then what you're going to start to see is the S&P start to show some weakness. And if those Magnificent 7 stocks continue to roll over, this whole thing could certainly turn around. And do we get down to 20%? That's a long way away, guys. A long, long, long way. So what did I have for my thoughts for financial woes? Since I went through a lot of yours. Sorry I didn't get to all of them. Number one, I put recession fears. The lack of data has everyone really kind of concerned. I'm not that freaked out about it. We'll get our data here in the next 30 days. We'll have a much better idea of where we stand. But I do think that the potential for recession is higher. We have a Fed who has said we're going to get interest rates down to 2%. Inflation to 2%. Over and over and over again. And here we are at 2.9%, and the Fed's like, nah, screw it. Let's cut rates. Let's cut rates and juice this market again because we're worried about jobs. That tells me that they are scared, because if they really were on point, like if I'm a voting member on the FOMC board, I am with member Collins. I am angry. You said 2%. We've said 2% to everybody on earth, and we're not getting there. You have failed in what you've said to our constituents and the population. Why? It's either they feel inflation is not significant, or that the unemployment situation could be far worse if they don't cut rates. And I don't know which camp I'm in right now, right? That's a conundrum that we'll just have to deal with as we get there, but it's not good. So I think recession fears are probably one of the biggest parts of this. I think number 2 would be trade tensions. And this is specifically for financials because there's a lot of financial firms like Goldman Sachs that has big exposure to international trade. And if we start slapping on 50, 70, 90, 100% tariffs, China, we're not out of the woods with China. We're still talking trash. And if this does get more contentious and escalates, some of these financial firms stand to lose a lot of money on trade. So, not good. I have earnings pressure. So, almost every financial firm had record trading revenue, but they're losing it elsewhere, right? They're not doing well with, I'll bring this up over here. When you look at their numbers off their earnings season that came out, you've got strain from other things, right? They're taking loan losses. They're all seeing less merger and acquisition. If there was more merger and acquisition, we'd see the Russell 2000 surge, but we're not. So I think earnings pressure is something that's going to be a problem. Yes, you guys did great in your trading, but you're issuing less loans. You got more customers defaulting, and that just seems, Moran will say, I told you so. Of course. Andres, here's the beauty of the way the world works. Out of that Federal Reserve, someone's going to say, I told you so, and they'll point the finger at the other person that was on the other side. And if it went the other way, flip-flops it, right? So right now you have the polar opposites would be Collins and Merlin. Merlin saying cut 50 basis points. Collins is saying don't cut at all. We should stay where we're at. One of them is right. We just don't know which one. Time will tell. And the last piece I had on here is higher interest rates. Not that they're, I'm talking about the financials and banks, yes. And Big Eb, I think that this does cascade down into other things, right? I think it cascades into other things, yeah. S&P has all-time high earnings, and PE ratio is, I didn't look at the PE ratio of SP. Let me see SPY with the PE ratio of SPY. Hold on one second here. Interest rates, while they are low, they're starting to creep up. Let's see, what was the, I don't think I have that data here. Sorry, I'm trying to bring up the PE ratio. The historical average for the S&P 500 is typically 16 to 18%, and it doesn't give me, these are all really complex ones. I don't know where I have it on TradingView. Oh, well, I'll find another one. If you think it's 31, wow, that's pretty high. I mean, if the historical average is like 15 to 18, you're talking over double. That's overbought. Still want to know what happens if they cut rates but increase the holding requirements. Well, if they cut rates, that should ease the markets. That should help financials. That should start to push things higher. However, cutting rates also is going to start to hit the inflation side of things. Now, that may be months out before we start to see the impacts of these previous 2 rate cuts, but man, we're already this far into the show. What is happening over here? Quick show today, or long show today. All right, so those great questions from Les and also from Jeff. A lot of that is subjective. The trade strategies or exit strategies, it's all about personal preference. I think what I appreciate about what you're asking, Jeff, is you're now saying, at least from what I'm reading from you, is instead of me kind of shooting from the hip with stop losses and modifying or doing different things every time, let me come up with a strategy, right? Let me come up with a method that I can replicate over and over again and maybe even automate at some point. Absolutely. That should be everyone's goal. Again, when you do things differently every single time, it's hard to measure what worked and what didn't work. Okay, I'm out of breath. I got too much to do. It's going to be an under 1 hour show, Oliver. Don't you worry. I got 9 minutes to go. Okay, we'll start at the bottom, which we've already talked about this. This is bad. I mean, there's really nothing else to say here other than this is bad news for Bitcoin. We knifed through that 99,000 like nothing. There's another level that was right around that 95,000 mark. That one evaporated, really quick. That evaporated like an R. Kelly wallet at a strip club. Gone. Now you're looking, there's not even anything really that solid. There might be something right around 85,000, which I mapped out earlier, and then ultimately you're looking at 76. And the way this is going, it feels like panic. It feels like liquidation's going on. This could move very quickly to the downside. And I expect this to continue. Russell 2000, same thing. We closed down below that 2381 level. To me, Russell 2000 is probably going to start looking for the next landing point. which is about 22.80. All right, that's 60 points lower than where we're currently at, which is about another, little over 2%. Call about almost 3% slide from here. So we shall see. We shall see. Gold down 0.4. Oh, these numbers have changed. Let me sort them again. NASDAQ down 0.86 on the day. While it's a red candle and still negative, the uptrend is still there. So really, I don't think there's anything to be concerned about yet with the NASDAQ. With gold, you had a 0.48% decline today. No big deal here. The only thing I would comment on is how you had the beautiful uptrend. You would expect it after this most recent decline to challenge all-time highs. It did not. It actually looks like a similar picture to what we saw with Bitcoin. It's showing some weakness, and we'll see if it breaks these lows right around 3,900. Crude oil was your third place finisher today, but nothing there. I mean, look, it's just between those two yellow boxes. If you guys are spread traders, load up. This is a good one. 10-year bond up down 0.22%. I do think you'll challenge this 1.2% here within the next couple of days or weeks maybe. And then lastly is your dollar index. Same thing between those two yellow boxes, kind of in no man's land, even though it's up 0.26%. So there you go for those market indexes. Trades, what did I have? So let's see. So I have presently, this is the current position I'm in, and it's not a good one, right? This is really a damage control situation. But I've got CoreWeave. Average price, cost basis is $82.09. We're at $75 right now, so down. That's about $7,000 in the hole at this point. We shall see what this week progresses. I do have options against that one, which is did not sell the 85s. I sold the $82 strikes. And the reason for that is that's pretty much right where my cost basis is. So let me modify that one for you guys real quick. Hold up. Hey, I want the right numbers on my screen. That should be 82. There we go. So that's the current one. And then let me look at my trade on this phone because I use this phone to do my trades for the show. So my show account is on my phone. I love that one. But I did jump on Amazon today. AMZN. I sold some puts on Amazon. I sold give me just a second as I look up the numbers here so we can get that all set for you guys. And then I will wrap up the show. Let's see. Orders. Filled orders. There it is. $1.40. Wow. I got a $1.40 on CoreWeave and a $1.40 on Amazon. That's an interesting one. And that expires also 11/21. And my strike price on Amazon is 222.5. And I'll take those underscore marks out. So these are the two positions I have on that one. Let me just look at the Amazon chart here. I did not, Steve. That was actually part of my thinking today. I'm like, nah, let's see, maybe. I'm not a big fan of that CoreWeave position. I sold the 222.50s. You notice that the origin of the gap here that happened on October 30th is 222.86. So I'm actually below that. I'd actually be fine owning it at 222. Now, if the market does continue to sell off aggressively and this close the gap, you've got another shot here at 210. So I felt like it was worthwhile. It's a $1.40 on a $220 security, so it's less than 1% for the week, but I'm okay with that. I'm all right with owning Amazon there. So anyway, those are the two. I should update this because I have on your screen that I just wrote 225. Let me put the right terms on there so you guys can all see that one, and that is a P next to that one. All right, 6 minutes to get fresh, y'all. For all our rapper friends out there, there you go. I'm bullish on a couple different things. I don't think that Amazon's going to fall that far by Friday. I still am bearish. I'm bearish on the market overall. I'm going to play CoreWeave very cautiously. I've got numbers in my head where I'll dump it if it gets below a specific number. But yeah, that one I'm not happy with at all. That fell way faster than I thought it was going to fall. But that's what you get for catching a falling knife, and then having options. So I was going to try to close out the options and close the underlier. Pain in the butt. All right, let's look at your economic calendar for mañana. I'm not sure why this is paused and not showing me anything. Let's refresh this bad boy and see what we've got cooking for tomorrow. We're going to start to see some data released. Don't exactly know what it is, but tomorrow we've got the TIC long-term purchases coming out for the United States. You have a federal budget balance, which is tentative as well, and that's pretty much it on the earnings front or economic front. You do have some earnings, though. That will be an interesting one. It's not a big day. The big day is Wednesday after market close, as everybody knows. That's going to be NVIDIA. But tomorrow, 115 companies reporting earnings. And on the top of that list is Home Depot. the H to the D. You got Medtronic, you've got Baidu as well as some of the bigger names, and Pinduoduo or PDD Holdings is your earnings. So there we go. I managed to wrap it up with 5 minutes to spare. Boom. The data will be market friendly, I would think. I would think so too. I think at this point, Trump's going to be like trying to pull some cards to make this slow down just a little bit. Any opinion on NVIDIA earnings? I'm concerned that NVIDIA is going to report bad earnings. I'm concerned NVIDIA is going to report bad earnings, and the reason for that is listening to TSM talk about how the demand for their chips has declined. So, it's dropped for the first time in quite some time. That's not reassuring because NVIDIA gets 97% of its chips from Taiwan Semiconductor. So if that starts to slow down, then that could be that beginning of a bigger sell-off in the chip space there. Although it seems like the demand is off the charts. I don't know. But yeah, makes me a little bit nervous there. All right, guys, that's going to do it for me. I'm going to wrap up here. If you guys have something you want me to discuss on tomorrow's show, it's tradermerlin@gmail.com, or put your comments down below any of the YouTube videos. If you... Oh, man, the video is so slow. It's like way behind here. If you have any comments, things you want me to discuss, great. Send them in at tradermerlin@gmail.com or on YouTube. If you liked the show, hit thumbs up. If you didn't, email me and let me know why. Or click that subscribe button if you're brand new, and I will see everybody tomorrow. Take care.